Hey everyone, welcome back to the channel. Today, we're diving into something super exciting, investing for beginners. And guess what? If you're in your 30s like us, this is the perfect time to start building your financial future. Exactly. I know, investing sounds intimidating. Stocks, bonds, dividends. It's like a foreign language. But don't worry, we've got you covered. By the end of this video, you'll feel like a pro. Or at least like you know what you're doing, which is half the battle, right? Yeah, we're not here to throw around jargon like capital gains or asset allocation without breaking it down first. We're here to make investing fun and easy. So grab your coffee, your favorite snack, and let's get started. And hey, if we can do it, so can you. Let's dive in. Okay, so first things first, what exactly is investing? Emily, you want to take this one?
Sure. Investing is basically putting your money into something that has the potential to grow over time. So instead of letting your money sit in a savings account collecting dust, you're trying to grow it, like a garden. You plant the seeds, and hopefully you get some nice returns later.
Yeah, but unlike gardening, you don't have to water it every day. Just be patient and let time work for you.
Exactly. So when you invest, you're usually buying things like stocks, bonds, or real estate, all with the goal of making your money grow. Stocks are shares in a company, bonds are like loans you give to companies or governments, and real estate is, well, buying property and hoping it appreciates over time.
But here's the thing. There's no such thing as a guaranteed return, right? Like, you're not going to get 10% growth every year just because you invested. There are risks involved, but there's also a lot of potential upside.
Yes, it's all about understanding that balance. Risk and reward. A little bit of risk, but hopefully more reward in the long run.
So, let's talk about why starting in your 30s is so important. I mean, we're not old, but we're not fresh out of college either, right?
No, definitely not. But here's the thing. The earlier you start investing, the more time your money has to grow.
The magic of compounding interest is real, folks. Basically, you're earning interest on your initial investment and the interest you've already earned. It's like money making money.
Exactly. I mean, if you start at 25, that's 10 extra years of growth. You don't have to be a financial genius to understand that the earlier you start, the easier it is to reach your goals.
Right. And in your 30s, you're probably starting to think about things like buying a house, saving for retirement, or paying for kids' college. So it's really the perfect time to build that foundation for your financial future. Okay, so we know why it's important to invest. But how do you even get started? I mean, do you just open an app and start buying stocks?
Well, not quite that simple, but yeah, it's really not as hard as people think. First, you'll want to set a goal. Are you investing for retirement, a house, or just general wealth building?
Right, because knowing your goal will help you decide where to put your money. If you're in it for the long term, like you're thinking about 20, 30 years down the road, then maybe you should consider things like stocks and index funds. But if you need money sooner, you might go for something less risky like bonds or a high-yield savings account.
Exactly. And once you've got a goal in mind, it's time to choose where to invest. Now, there are apps for everything these days. You can start with something like Robinhood, Fidelity, or even a retirement account like a 401k or IRA if you're already working.
Yup. And if you're feeling fancy, you can look into robo-advisors. They'll take your preferences and create an investment portfolio for you. It's like a personal trainer for your money.
I like that. So you don't have to be an expert, just pick a tool that makes sense for you. And most of these platforms make it super easy to get started with just a few bucks. You don't need thousands of dollars to dive in.
Now let's break down some of the core things you'll actually be investing in. We mentioned stocks, bonds, and index funds. Let's go over them one by one. Alright, first up, stocks. When you buy a stock, you're buying a piece of a company. Think of it like owning a small slice of a pizza. If the pizza company does well, your slice gets bigger.
Right, but if the pizza burns in the oven, you might lose your slice. So stocks can be risky, but they also give you the potential for big returns.
Next, bonds. Bonds are essentially loans you give to companies or the government, and they pay you interest over time, so it's like being the bank. You don't own anything, but you're earning some steady income. It's safer, but with usually lower returns than stocks. Think of bonds as the low-key investments. They're not going to make you rich overnight, but they're more stable. Now, let's talk about index funds.
Ah, the holy grail of beginner investing. Index funds are like a basket of stocks or bonds. When you buy one, you're spreading your risk across a bunch of companies or sectors, instead of putting all your money into one stock. It's a great way to diversify and lower risk.
So, if you're nervous about putting all your eggs in one basket, index funds are a fantastic way to ease in. Alright, so now that you know the basics, let's talk about some common mistakes beginners make. One big one is not doing enough research before investing. I know it's easy to just jump in, but you really want to understand what you're investing in before you hand over your hard-earned cash.
Exactly. You wouldn't buy a car without test driving it, right? Same goes for stocks, bonds, or any investment. Don't just follow the hype or the latest TikTok trend.
Yep. And another mistake is trying to time the market. People get so caught up in trying to buy low and sell high, but honestly, it's nearly impossible to do consistently. Just buy and hold. Time in the market is way more important than timing the market.
Yeah, and last but not least, don't put all your money in one place. Diversify, diversify, diversify. Spread your investments out to reduce risk and give yourself a better chance for growth.
So there you have it, a simple guide to investing in your 30s. The key takeaway: start now, do your research, and don't be afraid to start small.
Yup, and remember, you don't need to be a financial expert to get started. Just take it one step at a time and let time work its magic.
If you enjoyed this video, don't forget to like, subscribe, and share it with your friends. The more people know about investing, the better. And hey, if we can do it, so can you. Let's make those financial dreams come true, together. Catch you in the next video, and remember, invest like a pro, or at least like you know what you're doing.